Let's get ready for the South Carolina real estate exam with 100 questions on state-specific laws, principles, practice, and more. And don't miss what's happening in the bottom corner. It'll be key to your prep. We'll tell you how in a minute. Now let's get started.
Let's start with a review of South Carolina real estate law and practice. Fair housing laws in South Carolina. Which of the following acts is a violation of the South Carolina fair housing laws? Is it A, refusing to sell property based on buyer's ability to pay? B, advertising property as family-friendly neighborhood? C, refusing to rent based on race or ethnicity? Or D, charging higher rent based on property size? The answer is C, refusing to rent based on race or ethnicity. According to the South Carolina Human Affairs Law and Fair Housing Act, it is illegal to refuse to sell or rent based on race, color, national origin, religion, sex, familial status, or disability. What term refers to illegal steering in real estate under South Carolina fair housing laws? Is it A, encouraging choices based on availability? B, directing buyers towards neighborhoods based on race? C, providing alternatives based on budget? Or D, advertising multiple diverse options? The answer is B, directing buyers towards neighborhoods based on race. Steering involves guiding prospective buyers towards or away from certain neighborhoods based on race or ethnic backgrounds, which is a form of discrimination under fair housing laws.
Have you noticed the code in the bottom corner? Next time you're stumped, take that code to birdsy.ai for immediate help and a free study session with Birdsy, your personal AI study partner. Plus, you'll get access to hundreds of additional questions, helping you move closer to passing your exam with confidence. The next time you're feeling unsure or stuck, give it a try.
Which federal law complements the South Carolina Fair Housing Act? Is it A, the Civil Rights Act of 1964, B, the Fair Housing Act of 1968, C, the Americans with Disabilities Act, or D, the Equal Credit Opportunity Act? The answer is B, the Fair Housing Act of 1968. The Fair Housing Act of 1968 is a cornerstone of U.S. housing law, prohibiting discrimination in housing and providing a model for state-specific laws like South Carolina's. Under the South Carolina Fair Housing Law, which characteristic is not protected? Is it A, sex, B, religious affiliation, C, credit history, or D, familial status? The answer is C, credit history. While credit history can be used for financial assessments, it is not a protected characteristic under South Carolina or federal fair housing laws, which focus on race, sex, religion, etc. What agency enforces fair housing laws in South Carolina? Is it A, South Carolina Department of Revenue, B, South Carolina Real Estate Commission, C, South Carolina Human Affairs Commission, or D, South Carolina Department of Commerce? The answer is C, South Carolina Human Affairs Commission. The South Carolina Human Affairs Commission is responsible for enforcing the state's fair housing laws, ensuring compliance, and handling complaints related to housing discrimination. Which of the following actions is considered discriminatory under South Carolina fair housing laws? Is it A, refusing to sell a house because of the buyer's race, B, providing different commission rates to brokers, C, refusing to permit service animals for tenants, or D, limiting the number of pets? The answer is A, refusing to sell a house because of the buyer's race. Refusing a sale based on race directly violates the South Carolina Fair Housing Law, which prohibits discrimination in housing-related activities as guided by federal law and enforced by the South Carolina Human Affairs Commission. Under South Carolina fair housing laws, which of the following groups is protected? Is it A, veterans, B, military personnel, C. Religion, or D. Employment status? The answer is C. Religion. South Carolina fair housing laws reflect federal standards, protecting classes such as race, religion, and more. This aligns with the Federal Fair Housing Act's intention to prevent discrimination in housing. Real estate contracts in South Carolina. What is the minimum number of years a real estate contract in South Carolina must be retained? Is it A, 3 years, B, 5 years, C, 7 years, or D, 10 years? The answer is B, 5 years. South Carolina real estate law requires that all real estate contracts be retained for a minimum of 5 years to ensure compliance with state regulations. This retention period helps ensure transparency and accountability. What is required for a real estate contract to be enforceable in South Carolina? Is it A, verbal agreement, B, written and signed contract, C, email confirmation, or D, handshake agreement? The answer is B, written and signed contract. In South Carolina, the statute of frauds requires real estate contracts to be in writing and signed by all parties involved to be legally enforceable. This helps prevent disputes and misunderstandings. Under South Carolina law, what is a key component that must be included in a real estate sales contract? Is it A, brokerage fee, B, purchase price, C, buyer's credit score, or D, number of bedrooms? The answer is B, purchase price. South Carolina real estate contracts must clearly specify the purchase price. This ensures that all parties agree on the terms and obligations related to the financial transaction involved. Which party is responsible for making disclosure of material facts in a South Carolina real estate transaction? Is it A, broker, B, buyer, C, seller, or D, home inspector? The answer is C, seller. South Carolina sellers must disclose all known material facts affecting the property's value to potential buyers to uphold transparency and fairness in real estate transactions. What happens if a buyer defaults on a purchase contract in South Carolina? Is it A, the contract is automatically voided, B, the seller may retain the earnest money deposit, C, the buyer can renegotiate terms, or D, the buyer is entitled to a refund? The answer is B, the seller may retain the earnest money deposit. In South Carolina, if a buyer defaults on a real estate contract, the seller may often retain the earnest money deposit as damages, as specified in the contract terms. What is required when altering a real estate contract in South Carolina after the initial agreement? Is it A, verbal agreement by both parties, B, written consent by both parties, C, approval by a real estate agent, or D, notification to the South Carolina Real Estate Commission? The answer is B, written consent by both parties. Under South Carolina law, any amendment to a real estate contract must be in writing and signed by all parties involved. This complies with the statute of frauds, which limits enforceability to written agreements. Who is primarily responsible for executing the closing documents in a South Carolina real estate transaction? Is it A, the buyer's attorney, B, the real estate agent, C, the seller, or D, the lender? The answer is A, the buyer's attorney. In South Carolina, attorneys are required to supervise the closing process. Specifically, the buyer's attorney typically handles document execution, ensuring compliance with state legal standards.
If you're finding this helpful, please take a minute to like this video and subscribe to our channel for more practice exams, useful tips, and complimentary study sessions with Birdsy.
Disclosures required by South Carolina law. What is a key disclosure requirement in South Carolina when selling a residential property? Is it A, Disclosure of any previous sales prices of the property. B. Disclosure of any known material defects in the property. C. Mandatory termite inspections. Or D. Disclosure of neighborhood crime rates. The answer is B. Disclosure of any known material defects in the property. South Carolina law requires sellers to disclose any known material defects in a residential property to potential buyers, ensuring transparency and protection for both parties involved. Who is responsible for ensuring that a property's disclosure form is completed in South Carolina? Is it A, the buyer, B, the seller, C, the real estate agent, or D, the homeowners association? The answer is B, the seller. The obligation to complete the property disclosure form falls on the seller, ensuring all known issues are transparently communicated to potential buyers according to state law. When must a seller provide the property disclosure form to a prospective buyer in South Carolina? Is it A, before any negotiations begin, B, at the closing of the sale, C, within 10 days of buyer's written offer acceptance, or D, before or at the time of making a written offer? The answer is D, before or at the time of making a written offer. South Carolina real estate law necessitates that sellers provide property disclosure before or at the time of a buyer's written offer, ensuring informed decision-making. What happens if a seller in South Carolina fails to disclose a known defect? Is it A, the sale is automatically voided, B, the buyer has no recourse, C, the seller may be liable for damages, or D, the defect must be disclosed by the buyer? The answer is C, the seller may be liable for damages. Under South Carolina law, a seller's failure to disclose known defects can result in liability for damages if the buyer can prove that the non-disclosure affected their decision-making. Which type of property does the South Carolina Residential Property Condition Disclosure Act not apply to? Is it A, single-family homes, B, dwellings with fewer than 4 units, C, commercial properties, or D, townhouses? The answer is C, commercial properties. The South Carolina Residential Property Condition Disclosure Act targets residential properties, explicitly excluding commercial properties from its requirements, thus focusing on consumer protection in the residential buying sector. What document must be provided by South Carolina sellers to potential buyers detailing the condition of the property? Is it A, property disclosure statement, B, inspection report, C, title search document, or D, appraisal report? The answer is A, property disclosure statement. South Carolina law requires sellers to provide a residential property condition disclosure statement to potential buyers to ensure transparency about the property's condition. Under South Carolina law, what is the consequence if a seller provides inaccurate information on the property disclosure statement? Is it A, the contract becomes void, B, the buyer may have grounds to sue the seller, C, the property sale must be canceled, or D, the seller must pay a fine? The answer is B, the buyer may have grounds to sue the seller. If a seller provides false information knowingly, the buyer may sue for damages. Accurate disclosures are crucial to comply with the South Carolina Residential Property Condition Disclosure Act. Transfer of title in South Carolina. What document is primarily used to transfer ownership of real estate in South Carolina? Is it A, lease agreement, B, warranty deed, C, mortgage, or D, purchase contract? The answer is B, warranty deed. Ownership of real estate in South Carolina is typically transferred through a warranty deed, which includes guarantees about the title and offers protection to the buyer against title defects. Which of the following is a requirement for a valid deed in South Carolina? Is it A, notarization, B, witnessed by two people, C, registered with the local city hall, or D, signed only by the buyer? The answer is A, notarization. For a deed to be valid in South Carolina, it must be properly executed, notarized, and recorded in the appropriate county office to ensure public notice and protection. In South Carolina, which deed offers the least protection to buyers? Is it A, bargain and sale deed, B, general warranty deed, C, special warranty deed, or D, quitclaim deed? The answer is D, quitclaim deed. A quitclaim deed offers no warranties regarding the status of the title, simply transferring any interest the seller may have, which might be nothing. It's the riskiest option for buyers. Which part of a deed in South Carolina explicitly identifies the property being transferred? Is it A, covenant of seisin, B, granting clause, C, habendum clause, or D, legal description? The answer is D, legal description. The legal description in a deed provides detailed information about the property's boundaries and location, ensuring it is uniquely identified and distinct from other parcels. Which responsibility does a title insurance company have concerning real estate transactions in South Carolina? Is it A, preparing the deed, B, ensuring the buyer's creditworthiness, C, protecting against title defects, or D, completing a home inspection? The answer is C, protecting against title defects. Title insurance companies in South Carolina provide coverage to protect buyers from title defects, ensuring there are no encumbrances, liens, or unknown heirs claiming ownership. When transferring title in South Carolina, which deed provides the strongest guarantee of ownership? Is it A, quitclaim deed, B, general warranty deed, C, special warranty deed, or D, bargain and sale deed? The answer is B, general warranty deed. The general warranty deed is the most comprehensive, covering potential claims back to the title's origin. It assures buyers that title defects are the grantor's responsibility. What is one of the main purposes of a title search in South Carolina? Is it A, to set the property boundaries, B, to uncover liens or encumbrances, C, to inform property tax assessments, or D, to estimate the property's market value? The answer is B, to uncover liens or encumbrances. A title search identifies any legal issues affecting ownership, like liens or encumbrances, ensuring a clean transfer and protecting the buyer's interests.
Notice the code in the corner? When you're stumped by a question, enter it at Birdsy.ai for immediate help. Enjoy complimentary study sessions and access to hundreds of additional questions to help you pass your exam with confidence.
Earnest money in escrow in South Carolina. In South Carolina, what is required for a broker to disperse earnest money funds from an escrow account? Is it A, written authorization from both buyer and seller, B, verbal agreement from the buyer, C, sole discretion of the broker, or D, completion of the closing process? The answer is A, written authorization from both buyer and seller. According to the South Carolina Real Estate Commission, a broker must have written authorization from both parties to disperse escrow funds, as outlined in state regulations. How should a real estate agent in South Carolina handle a situation when there is a dispute over earnest money? Is it A, file an immediate complaint with the Real Estate Commission, B, notify both parties and place the funds in an interest-bearing account, C, hold the funds in escrow until a written agreement is reached, or D, disperse the funds to whomever they believe is entitled? The answer is C, hold the funds in escrow until a written agreement is reached. In South Carolina, the earnest money should remain in escrow until both parties reach an agreement or a legal order dictates its release, according to state guidelines. What is the primary purpose of an escrow account in South Carolina real estate transactions? Is it A, to ensure the broker receives their commission? B, to safeguard funds until the transaction is completed? C, to immediately distribute funds to the buyer? Or D, to deter buyers from negotiating the price? The answer is B, to safeguard funds until the transaction is completed. Escrow accounts secure funds until all conditions of a real estate transaction are fulfilled, protecting the interests of both buyers and sellers. If an earnest money check bounces before closing, what is the appropriate action for a real estate broker in South Carolina? Is it A, immediately cancel the deal? B, notify the buyer and allow them time to provide valid payment? C, disperse any funds available in the account? Or D, report the buyer to the local police? The answer is B, notify the buyer and allow them time to provide valid payment. The broker should address the issue by notifying the buyer and requesting a valid repayment consistent with the contract's terms and state regulations. What must a South Carolina real estate broker do within 48 hours of receiving earnest money? Is it A, deliver the money to the seller directly? B, deposit the funds into the broker's business account? C, deposit the funds into a trust account? Or D, return the money to the buyer? The answer is C, deposit the funds into a trust account. South Carolina law mandates that brokers deposit earnest money into a designated trust account within 48 hours to ensure proper handling and compliance. What must a South Carolina real estate broker do if earnest money is deposited in cash? Is it A, deposit it into the broker's private account? B, refuse the cash deposit and request a cashier's check? C, deposit the cash in a trust account within 48 hours of receipt? Or D, hold the cash in a secure location until closing? The answer is C, deposit the cash in a trust account within 48 hours of receipt. South Carolina law mandates that earnest money received in cash be deposited in a broker's trust account within 48 hours to ensure security and proper management. Who is responsible for holding the earnest money in a South Carolina real estate transaction? Is it A, the seller? B, the buyer's attorney? C, the escrow agent or brokerage firm? Or D, the lender financing the transaction? The answer is C, the escrow agent or brokerage firm. In South Carolina, the escrow agent or the real estate brokerage often holds the earnest money to ensure impartial management until closing. South Carolina real estate taxes. What is the primary purpose of real estate transfer taxes in South Carolina? Is it A, to regulate market prices? B, to facilitate equitable property distribution? C, to generate revenue for state and local governments? Or D, to prevent illegal property transactions? The answer is C, to generate revenue for state and local governments. Real estate transfer taxes in South Carolina serve primarily to generate revenue for state and local governments. These taxes are collected whenever property ownership is transferred, providing funding for public services and infrastructure. Which of the following is exempt from real estate property taxes in South Carolina? Is it A, residential homes? B, government-owned lands? C, commercial buildings? Or D, vacant lands? The answer is B, government-owned lands. Government-owned properties are generally exempt from property taxes in South Carolina, as they are not revenue-generating and serve public purposes. This exclusion helps alleviate the financial burden on public resources. How often is property reassessed for tax purposes in South Carolina? Is it A, every year? B, every 3 years? C, every 5 years? Or D, every 10 years? The answer is C, every 5 years. In South Carolina, property is reassessed every 5 years to ensure that tax appraisals reflect current market values. This ensures equitable taxation based on the actual value of property holdings. What happens if a property owner fails to pay real estate taxes in South Carolina? Is it A, the property is immediately foreclosed? B, the owner is fined but retains property? C, a lien is placed on the property? Or D, the owner's insurance premiums increase? The answer is C, a lien is placed on the property. If property taxes remain unpaid in South Carolina, the government can place a lien on the property, potentially leading to a tax sale or foreclosure if not addressed. This secures the tax obligation to the property. Which of the following best describes the homestead exemption in South Carolina? Is it A, a federal tax rebate for homeowners? B, a reduction in property tax for elderly or disabled residents? C, an exemption from all state taxes? Or D, a credit for first-time homeowners? The answer is B, a reduction in property tax for elderly or disabled residents. South Carolina's homestead exemption provides a property tax reduction for residents who are 65 years or older, totally and permanently disabled, or legally blind, offering significant savings and financial relief for eligible homeowners. What is the annual property tax rate for a primary residence in South Carolina? Is it A, 4%, B, 6%, C, 8%, or D, 10%? The answer is A, 4%. In South Carolina, primary residences are taxed at a rate of 4%. Non-primary residences, such as rental properties, face a higher rate at 6%. Which South Carolina authority is responsible for assessing property values? Is it A, State Treasurer, B, County Assessor, C, Board of Equalization, or D, Department of Revenue? The answer is B, County Assessor. In South Carolina, property assessments are conducted by the County Assessor's Office, which evaluates property values for tax purposes.
Don't forget to comment below with your tips, challenges, and thoughts on exam preparation. Your experiences can make a big difference for others.
South Carolina real estate licensing and regulation. What is the minimum age requirement to obtain a real estate license in South Carolina? Is it A, 18 years, B, 19 years, C, 20 years, or D, 21 years? The answer is C, 20 years. In South Carolina, individuals must be at least 20 years old to apply for a real estate license. This requirement ensures that the applicant is of a responsible age to handle real estate transactions. Which authority is responsible for regulating real estate licensure in South Carolina? Is it A, South Carolina Department of Insurance, B, South Carolina Real Estate Commission, C, South Carolina Department of Revenue, or D, South Carolina Real Property Council? The answer is B, South Carolina Real Estate Commission. The South Carolina Real Estate Commission is the governing authority for licensing real estate professionals in the state, ensuring compliance with the relevant laws and regulations. How many hours of pre-licensing education are required for a sales agent license in South Carolina? Is it A, 60 hours, B, 75 hours, C, 90 hours, or D, 100 hours? The answer is A, 60 hours. Aspiring real estate sales agents in South Carolina must complete a 60-hour pre-licensing course to qualify for the licensing exam. This ensures they possess the necessary knowledge for practice. What is the passing score for the South Carolina real estate licensing exam? Is it A, 60%, B, 70%, C, 80%, or D, 85%? The answer is B, 70%. To pass the South Carolina real estate licensing exam, candidates must achieve at least a 70% score. This standard ensures that licensees are adequately knowledgeable. How often must a real estate license be renewed in South Carolina? Is it A, every year, B, every 2 years, C, every 3 years, or D, every 5 years? The answer is B, every 2 years. Real estate licenses in South Carolina are required to be renewed every 2 years. This schedule helps ensure that licensees remain current with industry standards and practices. What is required for a South Carolina salesperson to change their license to a different brokerage? Is it A, submit a request form to the South Carolina Real Estate Commission, B, notify their previous broker and transfer license independently, C, complete an additional course on brokerage policies, or D, pay a transfer fee directly to their previous brokerage? The answer is A, submit a request form to the South Carolina Real Estate Commission. To change brokerage, a salesperson must submit a request form to the South Carolina Real Estate Commission, ensuring compliance with state regulatory provisions governing real estate license transfers. Which of the following is an action that could result in license suspension in South Carolina? Is it A, attending a continuing education seminar, B, misrepresentation in real estate transactions, C, holding an inactive license, or D, changing broker affiliations? The answer is B, misrepresentation in real estate transactions. Misrepresentation or dishonest practices in conducting real estate transactions is a violation under South Carolina real estate law that can lead to disciplinary actions, including license suspension. South Carolina Real Estate Commission, SCREC. What is the primary function of the South Carolina Real Estate Commission, SCREC? Is it A, enforce federal fair housing laws, B, regulate licensing and educate real estate professionals, C, grant real estate loans to buyers, or D, manage state housing inventory? The answer is B, regulate licensing and educate real estate professionals. The South Carolina Real Estate Commission, SCREC, regulates licensing and educational requirements for real estate professionals in the state, ensuring compliance with legal and ethical standards. It does not involve itself with financial transactions or federal regulations. Who appoints the members of the South Carolina Real Estate Commission? Is it A, Governor of South Carolina, B, SC real estate licensees, C, Secretary of State, or D, South Carolina Senate? The answer is A, Governor of South Carolina. The Governor of South Carolina appoints members of the Real Estate Commission. The Senate provides advice and consent, ensuring a balanced representation that aligns with public interest and professional standards. What is a common requirement for acquiring a real estate license as per SCREC guidelines? Is it A, pass a financial management exam, B, complete a pre-licensing education course, C, register with a federal real estate agency, or D, obtain a notarized letter of intent to practice? The answer is B, complete a pre-licensing education course. To secure a real estate license in South Carolina, applicants must complete a pre-licensing education course, along with passing a state exam and meeting other criteria outlined by SCREC. How often must a South Carolina real estate licensee renew their license under SCREC rules? Is it A, annually, B, biennially, C, every 5 years, or D, whenever a major law change occurs? The answer is B, biennially. South Carolina real estate licenses require biennial renewal to ensure professionals are up to date with industry standards and legal obligations as mandated by SCREC. What is the role of the SCREC regarding continuing education for licensees? Is it A, to provide all courses directly, B, to enforce completion of certain course requirements. C. To issue fines for non-compliance with federal education standards. Or D. To monitor the number of licensees taking each course. The answer is B. To enforce completion of certain course requirements. SCREC enforces the completion of continuing education courses necessary for license renewal, ensuring real estate professionals are informed of current practices, laws, and standards. Let's continue with a review of South Carolina real estate finance. Loan fundamentals. What is the primary purpose of a mortgage in South Carolina real estate finance? Is it A. To provide legal ownership of the property? B. To create a lien on the property as security for a loan? C. To improve property value through real estate investments? Or D. To allow the buyer to occupy the property? The answer is B. To create a lien on the property as security for a loan. A mortgage in South Carolina is a legal instrument used to secure a loan by creating a lien on real property per the South Carolina Department of Consumer Affairs. Which type of mortgage rate remains the same throughout the loan term? Is it A. Adjustable rate mortgage ARM? B. Interest-only loan? C. Fixed-rate mortgage? Or D. Balloon mortgage? The answer is C. Fixed-rate mortgage. A fixed-rate mortgage maintains a consistent interest rate over the life of the loan, ensuring predictable payments, according to the South Carolina Real Estate Regulatory Authority. What does LTV ratio stand for in mortgage lending? Is it A. Loan-to-value ratio? B. Loan-to-vendor ratio? C. Lease-to-vacancy ratio? Or D. Liability-to-value ratio? The answer is A. Loan-to-value ratio. The loan-to-value LTV ratio is crucial in gauging lending risk by comparing the loan to the property's appraised value, according to South Carolina mortgage regulations. In South Carolina, who generally holds the title during the mortgage period? Is it A. The borrower? B. The lender? C. The real estate agent? Or D. The county registrar? The answer is A. The borrower. In lien theory, states like South Carolina, borrowers retain title to the property, and the lender holds a lien during the loan term, ensuring legal borrowing rights. What is a primary advantage of using a government-insured loan in South Carolina? Is it A. Lower interest rates? B. Reduced down payment requirements? C. Higher insurance coverage? Or D. Extended loan terms? The answer is B. Reduced down payment requirements. Government-insured loans, like FHA loans, allow borrowers in South Carolina to qualify with lower down payments and credit scores than conventional loans, increasing homeownership opportunities. What role does an escrow agent play in South Carolina real estate transactions? Is it A. Secures the offer for the buyer? B. Manages the funds and documents between parties? C. Sets the interest rates for loans? Or D. Conducts property appraisals? The answer is B. Manages the funds and documents between parties. The escrow agent acts as a neutral party, managing funds and documentation to ensure that all conditions of the real estate transaction are fulfilled before closing. This process is governed by state regulations. Which entity typically benefits from a South Carolina lien theory in mortgage lending? Is it A. The borrower, who retains legal title during the mortgage? B. The lender, who holds the property title? C. The property appraiser during the assessment period? Or D. The state through additional property taxes? The answer is A. The borrower, who retains legal title during the mortgage. In lien theory states, the borrower holds legal title to the property, while the lender's interest is secured by a lien, which protects the lender's rights in case of default.
Notice the code in the corner? When you're stumped by a question, enter it at birdsy.ai for immediate help. Enjoy complimentary study sessions and access to hundreds of additional questions to help you pass your exam with confidence.
Loans. What is a key feature of a VA loan? Is it A, no down payment is required, B, high credit score requirement, C, private mortgage insurance is required, or D, higher interest rates than conventional loans? The answer is A, no down payment is required. VA loans, provided by private lenders but guaranteed by the Department of Veterans Affairs, typically require no down payment and no private mortgage insurance, benefiting eligible veterans and service members. Which statement is true about FHA loans? Is it A, they require a 20% down payment, B, they have flexible lending standards, C, they are used exclusively by veterans, or D, they eliminate the need for mortgage insurance? The answer is B, they have flexible lending standards. FHA loans ensure accessibility by having flexible lending criteria, including lower credit scores and reduced down payments, making them attractive to first-time homebuyers and those with limited credit history. Which loan type is typically known for having adjustable interest rates? Is it A, conventional loan, B, the Federal Housing Administration FHA loan, C, Veterans Affairs VA loan, or D, adjustable rate mortgage ARM? The answer is D, adjustable rate mortgage ARM. An adjustable rate mortgage ARM offers an interest rate that periodically adjusts based on a specified index, commonly starting lower than fixed rates but potentially varying over the loan term. What is the primary advantage of using a conventional loan over an FHA loan? Is it A, lower interest rates, B, ability to eliminate private mortgage insurance, C, government backing protection, or D, lower down payments for all borrowers? The answer is B, ability to eliminate private mortgage insurance. Conventional loans offer the possibility of canceling private mortgage insurance once the borrower reaches 20% home equity, unlike FHA loans, where the insurance can be required for the loan's life. How is a USDA loan unique compared to FHA and conventional loans? Is it A, offered only to urban property buyers, B, requires no down payment, C, higher interest rates compared to conventional loans, or D, available to non-U.S. citizens? The answer is B, requires no down payment. USDA loans, administered by the U.S. Department of Agriculture, promote rural housing development by allowing zero down payment for eligible rural area borrowers. Which loan type is specifically designed for rural property buyers and offers 100% financing? Is it A, the Federal Housing Administration FHA loan, B, conventional loan, C, Veterans Affairs VA loan, or D, the U.S. Department of Agriculture USDA loan? The answer is D, the U.S. Department of Agriculture USDA loan. USDA loans, offered by the United States Department of Agriculture, promote rural development by allowing buyers to purchase homes with zero down payment, making it a feasible option for eligible rural buyers. What is the typical down payment percentage required for a conventional loan? Is it A, 0%, B, 3 to 5%, C, 10%, or D, 20%? The answer is B, 3 to 5%. Conventional loans usually require a minimum down payment of 3 to 5%, making them an attractive option for borrowers with moderate savings, provided they meet credit and income requirements. Loan qualifications. In South Carolina, what is the minimum credit score typically required by most lenders to qualify for a conventional mortgage? Is it A, 580, B, 620, C, 700, or D, 750? The answer is B, 620. Most conventional mortgage lenders in South Carolina require a minimum credit score of 620. This requirement helps assess the borrower's creditworthiness for loan approval. What is a common debt-to-income ratio maximum for mortgage approval in South Carolina? Is it A, 28/36, B, 30/42, C, 35/50, or D, 25/33? The answer is A, 28/36. The 28-36 rule is a general guideline for mortgage lenders. 28% of income can go towards housing expenses and 36% towards total debt. Which of the following is a requirement for verifying borrower income in South Carolina? Is it A, proof of employment history for the past 2 years? B, a letter of recommendation from a realtor? C, proof of a stable monthly income over 6 months? Or D, a personal reference check? The answer is A, proof of employment history for the past 2 years. Lenders require proof of employment history for the past 2 years to validate the stability and reliability of the borrower's income, reflecting South Carolina's mortgage standards. What is typically required as a down payment to avoid private mortgage insurance, PMI, on a conventional loan? Is it A, 3%, B, 10%, C, 20%, or D, 25%? The answer is C, 20%. A 20% down payment is widely required by conventional loans to avoid PMI, which provides lenders with assurance of reduced risk in South Carolina. Which financial document is typically not required by lenders during a mortgage qualification process? Is it A, tax return, B, bank statements, C, utility bills, or D, pay stubs? The answer is C, utility bills. Lenders typically do not require utility bills for mortgage qualification, as they focus on income verification and asset assessment through documents like tax returns and pay stubs. What is the purpose of a mortgage pre-approval in South Carolina? Is it A, to finalize the mortgage interest rate, B, to determine the maximum loan amount a buyer qualifies for, C, to lock in the mortgage for final underwriting, or D, to avoid the need for a home appraisal? The answer is B, to determine the maximum loan amount a buyer qualifies for. A mortgage pre-approval indicates the lender's preliminary agreement to lend to the buyer and specifies the maximum loan amount qualified for based on a review of income and credit. Which factor is considered part of the underwriting process when qualifying for a loan in South Carolina? Is it A, location of the property, B, borrower's employment history, C, real estate agent's commission, or D, the number of offers on a property? The answer is B, borrower's employment history. Underwriting evaluates factors like credit, employment history, and income stability to assess the borrower's ability to repay the loan as part of financial assessment procedures. The loan application process. In South Carolina, which document is critical for reviewing a borrower's creditworthiness during the loan application process? Is it A, credit report, B, title insurance, C, home inspection report, or D, appraisal report? The answer is A, credit report. Lenders in South Carolina review a borrower's creditworthiness using a credit report, which details their credit history. This process is guided by state laws and lending regulations, ensuring fair evaluation and decision-making in the loan approval process. What does the acronym PD represent in the context of a mortgage payment? Is it A, principal, interest, taxes, and insurance, B, principal, inheritance, taxes, and income, C, property, interest, taxes, and insurance, or D, payment, interest, tasks, and insurance? The answer is A, principal, interest, taxes, and insurance. PD stands for principal, interest, taxes, and insurance. These elements are key when lenders calculate the borrower's total monthly payment, impacting loan affordability and approval. Which stage of the loan application involves verifying the applicant's employment and income information? Is it A, underwriting, B, pre-approval, C, closing, or D, escrow? The answer is A, underwriting. During the underwriting process, the lender scrutinizes the applicant's employment and income details to evaluate risk. This is a pivotal phase, ensuring that the borrower meets all criteria before loan approval. What is the primary purpose of a loan estimate in the loan application process? Is it A, to inform the borrower of potential loan costs, B, to adjust property taxes for the borrower, C, to determine the property's market value, or D, to finalize interest rates with the lender? The answer is A, to inform the borrower of potential loan costs. A loan estimate, mandated by the Consumer Financial Protection Bureau, CFPB, is crucial for transparency. It spells out potential costs for the borrower, allowing them to compare loans and make informed decisions before commitment. How long does a borrower typically have to review a loan estimate after receiving it from a lender? Is it A, 3 business days, B, 5 calendar days, C, 7 business days, or D, 10 calendar days? The answer is A, 3 business days. Upon receiving a loan estimate, a borrower typically has 3 business days to study it. This review period, mandated by federal law, ensures the borrower can consider the loan terms and potentially seek alternatives if needed. What information is typically verified during the preliminary stage of a loan application in South Carolina? Is it A, borrower's creditworthiness, B, borrower's employment and income details, C, completion of the loan estimate, or D, finalization of the loan terms? The answer is B, borrower's employment and income details. The preliminary stage of a loan application typically involves verifying employment and income to determine the borrower's ability to repay the loan. This ensures the lender has accurate initial data for decision-making. Underwriting for South Carolina real estate. What is a significant factor considered in the underwriting process for South Carolina real estate loans? Is it A, borrower's income stability, B, property square footage, C, location within a historical district, or D, number of bedrooms? The answer is A, borrower's income stability. Underwriting for real estate loans involves evaluating the borrower's ability to repay the loan, primarily assessed through income stability. This helps ensure loan reliability by assessing risk and financial credibility. Why is the borrower's credit score essential in South Carolina real estate underwriting? Is it A, it determines the property's resale value, B, it indicates previous financial behavior, C, it dictates the property's location, or D, it's required for all cash purchases? The answer is B, it indicates previous financial behavior. A credit score is a key component in assessing a borrower's financial history and attitude towards debt, affecting their ability to secure financing and the terms of the loan. How does a loan-to-value (LTV) ratio impact underwriting decisions in South Carolina? Is it A, higher LTVs increase lender risk, B, LTV ratio only affects first-time buyers, C, LTV ratios are irrelevant to underwriting, or D, lower LTVs decrease lender risk? The answer is A, higher LTVs increase lender risk. The LTV ratio is crucial in underwriting as it determines how the loan amount compares to the property's value. Higher ratios suggest increased default risk, possibly resulting in stricter loan terms. Which document is primarily used by underwriters to assess a borrower's debt obligations in South Carolina? Is it A, appraisal report, B, credit report, C, title report, or D, purchase agreement? The answer is B, credit report. A credit report provides comprehensive details about a borrower's existing debt, repayment history, and any financial liabilities, assisting underwriters in evaluating repayment capability and financial risk. What role does a property appraisal play in the South Carolina underwriting process? Is it A, it guarantees the property's condition? B, it verifies property ownership? C, it helps establish the loan amount? Or D, it impacts borrower eligibility? The answer is C, it helps establish the loan amount. An appraisal establishes the property's market value, which is pivotal in determining the loan-to-value ratio and ensuring the loan amount does not exceed the property's worth, thus safeguarding the lender's investment. In South Carolina real estate underwriting, why is the borrower's employment history important? Is it A, it determines the interest rate? B, it impacts the loan amount? C, it predicts long-term income stability? Or D, it reveals the borrower's character? The answer is C, it predicts long-term income stability. In South Carolina, underwriters review a borrower's employment history to gauge income stability, which is essential for ensuring consistent and reliable mortgage payments over time. Loan closing. What is the primary purpose of the closing disclosure in South Carolina real estate transactions? Is it A, to determine the buyer's creditworthiness? B, to summarize the key terms of the loan agreement? C, to list all properties the buyer is interested in? Or D, to calculate the property's appraisal value? The answer is B, to summarize the key terms of the loan agreement. The closing disclosure is a 5-page document meant to provide the buyer with detailed information about a mortgage loan, including loan terms and all costs associated with the loan, as per the Real Estate Settlement Procedures Act, RESPA. Which party is typically responsible for ensuring that the title is clear before closing on a property in South Carolina? Is it A, seller, B, buyer, C, lender, or D, real estate agent? The answer is A, seller. Sellers in South Carolina must convey a clear title, free of liens and encumbrances, to the buyer during closing. Buyers are encouraged to conduct title searches to confirm this. What is a common responsibility of the escrow agent at the loan closing in South Carolina? Is it A, granting the loan approval? B, handling funds and documents involved in the transaction? C, determining property value? Or D, negotiating loan terms? The answer is B, handling funds and documents involved in the transaction. Escrow agents play a crucial role in closing real estate transactions by handling the funds, managing documents, and ensuring all parties meet their obligations before finalizing the sale. Which document requires the buyer's signature at closing to acknowledge the payment of costs and the receipt of the property? Is it A, settlement statement? B, credit report? C, purchase agreement? Or D, home inspection report? The answer is A, settlement statement. The settlement statement, or closing disclosure, provides the buyer with detailed information about transaction costs and is signed at closing to finalize and acknowledge the financial terms. What role does title insurance play in South Carolina's loan closing process? Is it A, protects against future property tax increases? B, ensures the proper valuation of the property? C, protects the lender and buyer from past title defects? Or D, guarantees the structural integrity of the property? The answer is C, protects the lender and buyer from past title defects. Title insurance in South Carolina, required for closing, covers both the lender and buyer against potential title defects, such as undisclosed liens or prior ownership claims, ensuring clear ownership transfer. During a South Carolina real estate closing, who is primarily responsible for retaining the purchase agreement? Is it A, the buyer, B, the seller, C, the closing agent, or D, the real estate broker? The answer is C, the closing agent. In South Carolina, the closing agent is responsible for ensuring that essential documents, including the purchase agreement, are retained as part of the real estate closing records. South Carolina mortgage disclosure requirements. What is the primary purpose of the South Carolina mortgage disclosure requirements? Is it A, to protect borrower privacy, B, to ensure transparency in lending practices, C, to regulate mortgage interest rates, or D, to limit the amount a borrower can finance? The answer is B, to ensure transparency in lending practices. South Carolina's mortgage disclosure laws aim to provide transparency about mortgage terms and ensure borrowers have critical information about their loans. This helps borrowers make informed financial decisions. Which of the following disclosures is required by South Carolina law to be provided to borrowers prior to loan consummation? Is it A, good faith estimate, B, loan estimate, C, standard purchase agreement, or D, offset statement? The answer is B, loan estimate. South Carolina requires lenders to provide a loan estimate detailing the key terms and costs of a mortgage loan within 3 business days of application, as required by TILA-RESPA Integrated Disclosure (TRID) rules. How long must a lender wait after delivering the closing disclosure before a borrower can close on a home in South Carolina? Is it A, immediate closure is allowed, B, 1 business day, C, 3 business days, or D, 7 business days? The answer is C, 3 business days. Borrowers must wait a minimum of 3 business days after receiving the closing disclosure before closing, allowing time to review terms as mandated by TRID regulations. In South Carolina, which document is used to notify borrowers of the specific risks associated with adjustable rate mortgages? Is it A, adjustable rate mortgage disclosure, B, amortization schedule, C, truth in lending disclosure, or D, mortgage loan servicing disclosure? The answer is A, adjustable rate mortgage disclosure. Adjustable rate mortgage disclosures provide essential information about potential rate changes, helping borrowers understand how their payments could fluctuate. What type of information is included in the South Carolina disclosures to ensure borrowers understand their mortgage obligations? Is it A, tax benefits of owning property, B, loan terms, interest rates, and fees, C, market trends and property appreciation rates, or D, historical property values? The answer is B, loan terms, interest rates, and fees. Mortgage disclosures in South Carolina emphasize loan terms, interest rates, fees, and other mortgage specifics to ensure borrowers are well informed about their obligations and costs. Which document is required by South Carolina law to inform borrowers about the costs associated with closing a mortgage loan? Is it A, loan estimate, B, closing disclosure, C, servicing disclosure statement, or D, notice of right to rescind? The answer is B, closing disclosure. The closing disclosure is mandated by South Carolina regulations to outline all costs associated with the closing of a mortgage. It ensures borrowers are fully informed of their financial commitments before completing the transaction. What is the minimum time period required by South Carolina law between the delivery of the closing disclosure and the closing of a mortgage loan? Is it A, 1 business day, B, 2 business days, C, 3 business days, or D, 5 business days? The answer is C, 3 business days. The Real Estate Settlement Procedures Act, RESPA, and South Carolina law require a 3 business day waiting period after the delivery of the closing disclosure to allow borrowers time to review loan details before closing.
Thanks for joining us today. If you found this video helpful, subscribe to our channel for more practice exams, tips, and tricks. And don't forget to visit Birdsy.ai for complimentary study sessions with Birdsy, your AI-powered study partner.